Happy Sunday and welcome everyone to another Sunday lesson. This week we're going to have a little continuation off of what we learned last week with trading SPY on the 50 MA 5 minute. Now we're going to combine that with key pivots, MA crossings, and utilize volume in order to have what I like to call as reaction points. These reaction points can be used as entries and exits for either shorts or longs. So let me take a little adventure for you guys over the past full week for SPY. Now, we traded SPY all week with our reaction point theory, and sure enough, 100% success rate upon the clear reaction points. So let's go ahead and take a look at every single day. So here we have our pre-market data on. Again, you always want to have pre-market data because with these gap up, gap downs, most of the movement is happening there, and you can gauge your levels based off of that. Now, we see during we see during pre-market we're having rejections off of the 200, we're having rejections off of the 50 and support off the 50, some overhead resistance off of the 100. Again, I use the 50, 100, 200 for all my charts. Now, once we opened the day, we already had these levels panned out. I already gave it to members, and we essentially had a rough blueprint, but we didn't have a full blueprint of where to go. So, during the open, we see some reaction off of that 200 MA. We see some support off of that 100 MA, and we go up through the levels. We have a little rejection here. Again, we're not shorting yet. We're not shorting yet because we don't have a clear blueprint yet. This bear flag wasn't drawn quite yet. So here we had a rejection, again, not off of a level, so we couldn't short. Go back down here, and we found support off of our 50 MA, 100 MA reaction. So here, where these two MAs meet, this level right here, so we had the 391.5 level, I believe. Sorry, the indicators were blocking that, lining up with our 150 MA. So this is giving it a better confirmation of a bounce up. So we went ahead and, of course, entered our longs here. And when we need to exit, well, two things. I always recommend trimming to my members. And so what we did is we trimmed some around the 200 MA for security and for cushion. And then we went ahead and, first of all, we didn't exit all of them because there's no confluence here. There's no reaction points. It's simply the 200 MA. So again, we trim, and then sure enough, the rest are going to ride up with us. Now, here is the point where we knew we had a bounce and a rejection, so we can start drawing our flag. So we lined it up, extend them out, parallels, boom, we have a bear flag right here. So now we have the rail coming in overhead and this key pivot level right here. So this is going to give us a greater confirmation of more overhead resistance. We're going to go ahead and exit our longs and go ahead and short the downside. Sure enough, rejection here, and then we have the 200 MA again. We're going to trim and set the rest back to break even. Unfortunately, they did hit break even right after that, but you still made coin. Now, the ultimate play is when the bear flag is going to break. Look at it lining up with the 50 MA, and look at it lining up with the key pivot as well. Now that, there's no greater confirmation of downside than that for intraday for us. So we went ahead and broke, went to the short side. Sure enough, worked, trimmed a little bit on our MAs right here, but we didn't get rid of them all because we have all that overhead resistance. We knew we're going to see some downside. We're not going to see a bear flag break down and then not have much movement. So here we trimmed, and sure enough, the rest of the way worked out great for some 200, 300% daily puts. So again, next day, same exact thing here, same exact thing. We have our reaction in pre-market. We have our reaction points where our MAs are going to meet with key pivots and rails, and that's just going to give us greater confirmation. So here, the morning was sloppy. We didn't play it much. Again, rejection. We have a bear flag formed, and boom, where's that bear flag going to break? Coincidentally, right where the 50 MA meets it, and right where this key level 391.5 meets it. Again, another huge confirmation of downside. Look at that 50 MA overhead. Don't let go of the rest of the shorts until it breaks up. Boom. Downside the rest of the day. Now, let's take a look at one where no plays were found for us to the downside. So again, we never had a bear flag breakdown, but we did know when we're going to get rejected based off of the 50 MA coming down here, 100 MA. You can always use the MAs as overhead resistance. Now, it cleared all of them, and it cleared our key pivot right after. So there was a play to the long side, but full transparency, we didn't play it. Now here is where we had two bear flags break down. So what do I mean? Let me get rid of one of them real quick. So on the open, we were swimming within a channel. Once that broke, obviously bear flag to the downside, short it, and we caught our support right here around the 50 and the 100. Now we have a new flag to play with. Let's draw it out right now. So we have top right here, and then boom. So once we broke that, again, downside, same exact move. Found support at the what? 50, 100, congestion, couldn't bounce up, more downside, finally finding support at the 200. And now where is all that congestion happening? Reaction points. So the whole point of this theory is you want to use the reaction points themselves to ride the in-between space. You don't want to make any new moves while it's still being congested. Now let's take a look at what I mean by don't make any new moves when it's being congestion. So let's see if we can go to, this was Friday. We can use Friday. So we have congestion here that we're not going to play any direction. Again, it's bouncing in between congestion. You need to find a break from that area in order to continue. Again, right here, congestion. Look at all these key pivots, these MAs. You don't want to be touching within this until it breaks away. You want to utilize the area in between. Again, right here, we would enter reaction points. Utilize the area in between to profit. Again, reaction points, areas in between where there's little reaction points to profit. You don't want to enter either side for this theory in between, because now you have no blueprint. You have no stop loss catching you, and you can either reverse or bounce at any location. Well, I hope this method cleared some questions up for members, and I hope this method also enhanced some trading for non-members as well. Hopefully they can utilize this. But again, the theory is quite simple. You have your levels in the beginning of the day, and then you want to use the 50, 100, 200 MA on the 5-minute chart with pre-market data on. Make sure you're paying for real time with whatever broker you got, so you can have the full pre-market and after hours data on. You want to use the reaction points, aka where the MAs meet the pivots, or when the MAs meet the pivots and the rails of whatever channel or flag you draw intraday. These are going to be your entries and or exits. The areas in between are your profit margins. Hopefully you guys utilize this theory, and I will catch you guys for a full week of profits ahead.